Hey guys, welcome back. I hope you had a really great day trading today. So today was Thursday, August 15th, and holy smokes, we were so squeezy today. So earlier this week on Tuesday and Wednesday, we did have the inflation data. So we had that gap up, and then we had PPI and CPI. And then today, we had better than expected consumer spending. So we also gapped up today. Now, I've been doing some behind the scenes research. The numbers definitely feel off. Consumer spending being higher than average, that is expected with back to school and this time of the year. And add inflation to the mix, of course, consumer spending is higher. I actually don't believe that this squeeze has anything to do with the recent economic data. I think that this entire move here is one big squeeze off of last week's 65 VIX. And of course, that is just my opinion, but I don't think that this rally is on solid ground at all. Technicals are saying bullish. We did get this bullish cross up right here, but Stupid Willie, and if you use RSI, everything else is screaming overbought. So just be mindful. Yes, we can definitely still go higher, but I'm not surprised to see this squeeze after that historic move last Monday. All right, so that was just my rant. So let's start with SPY today. We did open with a gap up completely outside of the implied move. And if you've been following for the past few weeks, and really it's been the last 30 days. So basically right from here, sorry, no, it goes back even further. Let me zoom out a little bit here. So ever since we made all-time highs right here, and that was 30 days ago, every time we gapped down and got completely outside of the implied move, we followed through in whatever direction that gap was. So for right here, we gapped down outside of the implied move and we pushed lower. Right here, we gapped outside of the implied move, pushed lower. We had one right here where we gapped up completely outside of the implied move and we pushed up. And then I believe this one was as well, where we gapped completely outside of the implied move, and then we followed in that direction. So today, the exact same thing happened. We gapped up completely outside of the implied move, and let me get back on the 30-minute time frame that has my numbers. So right here, we gapped outside of the implied move. We got above the 50-day moving average and the 1 hour 200 moving average right here. So gapped over that, got to the top of the implied move, and we pushed higher. So if we don't even touch this implied move at open, the chances are of a follow through in whatever direction we gapped. And that has happened a lot in the past 30 days. And every single time it has followed that pattern. So if we open completely outside the implied move to the upside, then just expect a push higher. And if same thing, if we gap down underneath the implied move, if we don't immediately get back in there, then expect a push lower. And that's just an effect from the nature of options. So we just tend to squeeze in the direction of the gap, especially if it's outside of the implied move. So we did push past the next day's implied move, but we did stay within the 30-day average volatility. If you did watch last night, I mentioned this. I said that this does not look wide enough and that we're going to push higher through it. So that's exactly what happened, and SPY did close up 1.71%, so really big move. VIX down another 6%. We are now down to 15. In the past 10 days, VIX has come down 50 points. That is literally unheard of. And we did not even touch the implied move today. And then SPX, same thing over here. We gapped completely outside of the implied move and pushed higher. And I didn't mention this in SPY, but we did close just short of the next resistance level, which was right here. Tonight after I'm done recording, I'm going to go see what this was, what happened that day, why this was resistance, and why we dropped so hard afterwards. But at the moment, I don't know what this resistance is. It was within the top of the trading range here, but we didn't quite get to it. So huge move in SPX, 1.61%. VIX again down 6%, and we did not even touch the implied move today here. And QQQ, we opened with that same gap up, completely outside of the implied move. And from there, we got above the 1 hour 200 moving average, which you can see the momentum there is down. And we still kept pushing further. We got right up to this level right here, which I'm going to zoom out. That was previous support right here, and then support here. And then when we gapped underneath that level, and then we swung back up, we did see that as resistance. So we are just above that level, and we did get a little bit into these gaps that are right there as well. We didn't quite get into the bull gap, but we did fill a little bit of that bear gap. So QQQ up 2.53%, VXN down 4.29%, and here we also did not touch the implied move. And it is stuff like this. This is why I only day trade and I never hold anything overnight. And then taking it over to IWM. IWM also completely gapped over the implied move right here. So we got up, and implied move was 1.65%. So it definitely wasn't a small move. And we pushed up, we got above 211, which is that long standing support and resistance. You can see back here it was support in 2021, then in 2022 we did drop under it, swung back up, resistance, and then we have been underneath that level for a long time. We saw that as resistance this past March, and then we just got above it with that rally. And then today, this is so messy, it looks so funny, but today we actually closed right above that 211 level. We're at 212.04. And then from there, you could see we pushed up and we filled this gap right here. That gap was from that first time we gapped above 211. So we did fill that gap. That 1 hour 200 moving average was right there. It did push us back down, and we kind of just hooked on top of that 30-minute 200 moving average. So the second half of the day today was between 30-minute 200 moving average and 1 hour 200 moving average, and it was within this battle zone that was above 211. So massive move. And what's funny here also is we gapped above the 50-day moving average, but we also gapped above this little piece of down gap from last Monday that we didn't fill completely. So really wild day in IWM and DIA. Wait, let's go back. IWM closed up 2.59%, and RVX down 3.63%. And I don't know why I'm not trading small caps. I should be trading RUT with volatility at 23. That's at my preferred volatility level. VIX is down to 15, so SPX has been driving me crazy. And here we also did not stay within the implied move. And then DIA. Let's switch over to the Dow Jones. This was a really interesting move here. We gapped up, and here we don't have an implied move, but we did gap up. Oh my gosh, this is crazy. Okay, so we gapped up. I didn't put this up gap here, but I don't even know if I can read this with any more craziness. Okay, so now we have this insane level underneath us that is this up gap from back here, this down gap from right here, and this up gap from today. So I have absolutely no idea how that's going to react, but as a technical analyst, I am really interested in seeing what happens here. So anyway, we gapped over that down gap from back here, and this down gap is actually from right after Amazon earnings, and we gapped above that, and then from there we pushed higher, and we got all the way to the top of the 30-day average volatility. So the top of the trading range was 406, and we did close at 405.88. So what did you guys think today? How did you do? Let me know in the comments. Do you think this is just a big gamma squeeze and it just needs to play itself out? Or do you guys think that economic data did come in at an acceptable level to justify this move? I really want to hear what you guys think. Either way, this squeeze was happening today. There were signs everywhere, but now we have to look for signs to see what is to come. So that was today. Tomorrow is the last day of the trading week, and let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to take better trades, choose better strikes, and if they generally make it easier for you to navigate the market, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. I know sometimes I move fast, and if you don't understand something, I'll try and put it in a different way in the next video. And if you learned something new today and you just want to say thank you, there is a thank you button underneath the videos. You are more than welcome to buy me a cup of coffee. It's an easy way to show appreciation, and I definitely appreciate it. All right, so starting in SPY, tomorrow's implied move is between 548 and 554, and that is from options. Options is saying 0.71%, and then the 30-day average volatility is a lot wider, and that is 1.99%, and that is between 542 and 565. And the implied move on Monday's contract is between 547 and 559. And to the upside, the only level in the implied move is actually the top of the implied move. It's 554. Oh, I think I might be wrong about that. We do have right here, just above where we closed, we do have the next resistance level. Let me just go ahead and put that in right here. That goes back to, give me 1 second, fix the color, and that goes back to August 1st right here. So that was right before we did see that big drop. So right here, Amazon earnings gap was right here. So clearly this was right around big earnings time. So August 1st resistance right here, that is just above us, and that is at 554. Just $1 above where we closed. And then above that, then we have the top of the implied move at 554. 559 is the top of the implied move on Monday's contract. And is that really $5 apart? No, I'm sorry. I have 554. Okay, that's 557 right here. All right, 557 is the top of the implied move. 559 is the top of the implied move on Monday's contract. And then above the implied move for the next 2 days, but within our trading range, we have a lot going on. So this is just off of all-time highs right here, 565.16. So if you can believe it, all-time highs are actually within reach, just outside of the trading range. But we also have that up gap right here and that down gap right here. That was the initial island top that we saw 30 days ago that set all of this into motion. So if there's a place where bears are hiding in full force, it's going to be up here. So the bottom of that gap is 560. Top of that gap is at 564.25. 565.16 is all-time highs. So that is a really interesting upside. We do have one more resistance right here. I'll just go ahead and slide that in there just to have it. So we do have the last two known resistances are in the top of the implied move. And then to the downside, we do have the 35 EMA. Always know where your 35 EMA is. And today it just happens to be outside of the implied move. And if you've been watching for a while, you know that when the 35 EMA is outside of the implied move, like it is here, so the bottom of the implied move is at 548, and then that 35 EMA is down here, we do tend to get pulled down towards it. And in the last few days, we had that 35 EMA within the implied move. So the fact that it is underneath could signal a down day tomorrow. We also have this up gap from today, And then within that gap, we have the 50-day moving average that we just gapped right over, and then also the 1 hour 200 moving average. So that looks like it could be a support if we do drop. That is a pretty decent sized drop, but let's measure that out. So 1.5%. So if we drop 1.5%, I would kind of expect a bounce at that level. And then, so 548, bottom of the implied move, 547, bottom of Monday's implied move, and then this cross right here, that's around 545. Bottom of that gap is 543, and then underneath all of it, we have the 30-minute 200 moving average. You can see that 30-minute 200 moving average started to curl up today after we saw that 35 EMA pull through. That is bullish on this time frame. However, that doesn't mean that we can't pull down all the way to the 30-minute 200 moving average. In fact, testing that is a healthy move. And if you look at Stupid Willie, or if you're using RSI, we are extremely overbought here. In fact, I'm pretty sure I heard Stupid Willie screaming a little bit today during market hours. And that is SPY, taking it over to SPX. The implied move over here for tomorrow is between 55.05 and 55.80. 55.80. And that is from options, and the 30-day average volatility is a ridiculous amount bigger, 54.35 to 56.55. The implied move on Monday's contract is between 54.95 and 55.95. And just like today, this is what I trade, and just like today, this is way too small of a range. I am not going to be participating unless we find ourselves either way up here or way down here. I usually sell spreads, and there is no way that I would be selling at these levels. That is way too close, and the 30-day average volatility is 1.99%, so a 0.61% implied move is ridiculous to me. And just like we saw today, for tomorrow, I would expect to see us somewhere between the Monday's implied move and the top of the trading range, or the bottom of Monday's implied move and the bottom of the trading range here. And who knows, we may see a flat day, we might stay right in the middle here, but I think after the week that we've had, it's likely that we see a little bit of profit taking. And to the upside tomorrow, the first level to look for is going to be right here, and that is at, hold on one second. So that is at, I can get it straight. Okay. So 55.66. So I would call that 55.70. So that is our first level of resistance. Above that, we have 55.80 is what options are saying is the top of the implied move for tomorrow. And then above that, we do have 55.95. That is the top of Monday's implied move. And also just underneath that, we have this resistance right here that goes back to just off of all-time highs. I don't know what the catalyst was for that, but just off of all-time highs, and then we took a swing back up, and that was at 55.86. So right between tomorrow's implied move and Monday's implied move is that level. And then at the very top of the trading range, we also have that down gap off of all-time highs, and then a few days before, actually a day before, that up gap right here. So we have that island top, which can be a battle zone, especially since it is defending all-time highs. And if there's anywhere bears are hiding their sell orders, it's going to be in this gap. So we are extremely overbought here. So do we get even up to this gap? I guess we will see tomorrow. But if we do, see, I wouldn't use any of these strikes. But if we get up here, definitely I would put on some bear spreads here. All right, so that is the upside. And then to the downside, we have the 35 EMA outside of the implied move. So again, if you've been following for a long time, you know that having that down outside of the implied move so far usually pulls us down towards the 35 EMA. So it's very possible we have a red day tomorrow to close the week. It would still be a massive green week. So the bottom of the implied move for tomorrow, 55.05. Monday's bottom of the implied move, 54.95. 50-day moving average is right there. We did see that as resistance yesterday. It is right within this up gap that we saw from today. We also have the 1 hour 200 moving average. The 1 hour 200 moving average, the momentum is still down here. That in itself could pull us lower as well. So 35 EMA being underneath the implied move and the 1 hour 200 moving average having that downward tilt could definitely have some effect. So the bottom of that gap is at 54.54. Let's just call that 54.55. And then underneath all of that, we have the 30-minute 200 moving average. And I usually say don't go long at a moving average that is pointing down. And 90% of the time that is true. But we have been squeezing so hard that we just completely blew past this 30-minute 200 moving average. And not only that, we saw it curl up. And then that little curl up right there is resting right on top of that up gap right before we saw inflation data this week. So truly a wild trading range for tomorrow. I have conflicted emotions about it, but if we see a big move, I definitely see some places where I think we could either get rejected or bounce. So it looks fun overall. And QQQ, the implied move over here, is between 470 and 480, and that is ridiculously tiny compared to the 30-day average volatility. Remember, we had VIX at 65. I don't think VXN got that high. It got maybe up to 45. But the 30-day average volatility, 460 to 490. So check out that trading range, 460, 470, 480, 490. That is a $40 trading range. That is huge. And then the implied move on Monday's contract is 467 to 481 and to the upside directly above us. And really, let's go over this level first because we closed just above it and it's right in the middle of the trading range. This is 474, and I'm going to zoom out, and that level was support previously. That was back in June, and then we saw it support right here in July. And then when we broke underneath it and then we swung back up, that was resistance. That is exactly where we are today. We're just a little bit above that level, but we are extremely overbought. This could be a resistance, and not to mention the fact that we have this gap right here. This is, I don't actually know what gap this is from. This is not the Amazon gap, but we do have another island top right here. So up gap here, down gap here, 50-day moving average here, and that is all within this tiny little implied move that we have for tomorrow. So the implied move is actually deceiving. 1% is not a small move, but it looks really small compared to the 30-day average and the big moves that we've been having recently. So let me get back to the 30-minute where I have my numbers. So then the top of that gap is at 480 and a half, so just outside of the implied move, and it's really right in between Monday and Tuesday's implied move. So I don't know, in QQQ, it's funny, I would maybe sell that spread just because we have all this resistance here and we're so overbought. I wouldn't in SPY, but QQQ I would. And then above that, we have resistance right here. That is still within our trading range, so let's throw that in there. 484 is right there. And then at the top of the trading range, we have this down gap, and I believe this is also just off of all-time highs. It's a little bit off of all-time highs, so we did come down a little bit before gapping down, but that bottom of the down gap is right there, just under 490. We could call it 489. So interesting top of the trading range to QQQ. I might actually be trading QQQ tomorrow. And then to the downside, we have is this the 1 hour 200 moving average that I'm looking at hiding underneath the numbers? Yeah, it's a 1 hour. So 1 hour 200 moving average. And it is really weird to see that moving average down and then we got above it. And actually it's the 30-minute 200 moving average that's a little bit weirder. So we had the downward momentum here, and then we just took off. And then usually when you see the price go above the moving average, but the moving average is pointing down, you see a pullback. But in this case, we actually just pushed higher. So now we're getting above the second moving average that's pointing down. So that is the first level to look for to the downside. We have the 35 EMA right here, and it is underneath our trading range. And again here, having the 35 EMA underneath the implied move is a bearish signal on the day. So tomorrow it's way more likely that we have a flat day or a down day. And then just underneath that, we do have the up gap from today. Bottom of that gap is at 462. That would be a huge drop. Let's measure it out really fast. So if we got to the bottom of the gap, that would be a 2.5% move. I would think at that point I would probably be comfortable with putting bull put spreads on the day, but just be careful because 30-day average suggests 460 if we drop, and we also have the 4-hour 200 moving average there. And here again, just like in SPY and SPX, we do see that 30-minute 200 moving average that was pointing down when we blasted above it. It is starting to curl up. So this time frame, we did see that bullish cross up here, and it is getting that follow through. Definitely doesn't mean we can't come back down and test the 30-minute 200 moving average. Just like when we broke underneath it, when we do take swings towards it. So we do make a move that's far away, we swing back towards it. Move far away, swing back towards it. So here we had a pretty big move, swinging back towards the 30-minute 200 moving average would be a very healthy move. So that is QQQ, and then let's go to IWM. The implied move here tomorrow, and this chart is really messy. I'm gonna have to take it one step at a time. It's not messy, it's just that there's a lot going on. So the implied move for tomorrow, 209 to 215, and that is from options. 30-day average volatility, quite a bit wider, 205 to 218. And on Monday's contract, 208 to 216. And then to the upside, we have the 1-hour 200 moving average. We did see that as resistance today, and we did see the 30-minute 200 moving average as support today. And it wasn't a huge support, it was just that in that very last candle, we did see a bounce off of it. Getting ahead of myself because we're still to the upside. So 1-hour 200 moving average here. Above that, we have lots of resistance. We did push into it a little bit today, and we closed out the bull gap of the double up gap and down gap island top. We closed out that first gap that was right here. That was right after we broke out above that 211 level. So right here, we closed that out today. We have the second gap right here. Lock that into place, and that is just above the 1-hour 200 moving average. And then we also have that down gap, the rest of that down gap. So top of the implied move is just above where the up gap and down gap meet. So 215, top of the implied move. And Monday's top of the implied move is 216. The top of this down gap from our breakout above 211 and on the way back down. So the top of that is 216.25, and the top of the implied move, or the top of the trading range, and the top of the trading range here looks crazy tomorrow. And if you guys trade IWM, let me know what you're gonna do. And to the downside, 30-minute 200 moving average, that momentum is still pointing down. And I know that SPY, SPX, and QQQ have not been playing by the technical rules in the past few days, but IWM has been. So you see that IWM got above this moving average that's pointing down, and it got pulled back. So that is what I mean. And then underneath that, we do have 211 again. That is that big level that goes multi-year support and resistance. So this is 2021. And then in 2022, when we dropped underneath it, resistance, we traded sideways underneath that level for a long time, saw it as resistance in March, got back above it in this recent wild rally, and now we are just I think a little bit above that. Yeah, so we're just a little bit above 211 right here. We are curling back down. Underneath that, we have another interesting level. So we have this down gap from last Monday. Today we gapped over it. We had a little bit left to close out and we just gapped right over it. So we have an island bottom here. Bottom of the implied move, 209. Bottom of the implied move on Monday's contract, 208. 50-day moving average is right here at the bottom of the implied move on Monday's contract. Momentum there is still flat. And then underneath the entire trading range, we have the 4-hour 200 moving average. So truly interesting stuff. This downward facing 30-minute 200 moving average is kind of what sticks out at me and definitely should be on your chart. And this 35 EMA on this time frame is just underneath the trading range, and this actually still is bearish. It hasn't crossed up yet here, so keep an eye on this 35 EMA. And then taking it over to DIA. And I am definitely losing my voice at this point. I am such a chatterbox. I don't know if you can hear it in the video, but I'm definitely losing my voice here. And DIA is really interesting because it has gapped up over all resistance levels. So it has broken free of resistance. The next resistance is actually at the very top of the 30-day average volatility at 212. And you could see that right here, right before we got smacked down to the weekly 35 EMA. So 412 is really the only target. And we are overbought, so that could bring our momentum down and do a little bit of retesting again. And also that 35 EMA is underneath, I can't say the implied move, but it's underneath this gap. So maybe we'll get pulled back in. And the trading range for tomorrow is 400 to 412. And we also have the implied move on the week, 387 to 403. So does anybody want to place any bets on if we close within the implied move, so underneath 403? That would be let me measure that out, just a 0.65% move we need to get into that implied move. No, I think I was wrong there. I think it's a little bit more. That was the gap I was measuring. Okay, yeah, so to get into 403, we need about 0.9% down. So a 1% down day would get us back into the implied move for the week. If that happens, I don't know what I'm going to do. I have no ideas right now, but that would be really cool. So that is DIA. And okay, and then to the downside, 35 EMA. And then underneath that, we have this up gap, this down gap. We just gapped right over it. So we have this gap as well in there. So 2 up gaps and a down gap. This is getting crazy. And underneath that, 1 hour 200 moving average. The momentum there is up. 30-minute 200 moving average underneath that. Momentum there is also up. So DIA is the most bullish looking setup, technically speaking. I know all the others have been rallying their faces off, even despite technicals, but from a technical standpoint, DIA is the most bullish looking chart. So there you have it, guys. Have fun tomorrow. Tomorrow's Friday, so enjoy your weekend. I hope your weekend's green. I hope you have a really green day tomorrow. Have fun, trade safe, make sure you take profits when you're up.